Welcome back to another video. I hope everyone's doing good. Today I'm going to be going through retests and confirmations. Hopefully, if you watch all my previous videos and then you watch this one, you can begin to understand how to develop and form your own trades, or at least be able to identify trades or trade opportunities that are taking place in front of you on the charts. First thing I want to start with, two important concepts, right? The markets are a tool to transfer wealth from the impatient to the patient. This might seem a bit random, but it's really going to tie in to the stuff that I'm teaching you guys in a second. And second, the markets are a game of probabilities. Guys always have to remember this. Nothing ever in these markets is a given. There's literally 1,000 external factors, lots of things going on at the same time. Even if you have a stop loss, even if you have whatever you can get stopped out. You might have lots of reasons to be taking a trade, but there's literally no guarantee that it's going to work or it isn't going to work. But yeah, I think it's important to remember this in general. Just never let go of the fact that what you're doing, even if you're on a big winning streak, it's never guaranteed to keep going. And this is super important with the stuff that I'm going to show you guys. And in a second, you're literally going to see why it matters. All right. First thing I want to cover, breaks of structure. As I've written here, market structure is when price movements adhere to a pattern or a range. So over here, if you look at our little diagram, market structure in this case is a range. Got support, we got resistance. Price is hitting support, up to resistance, down to support, resistance, resistance again. So clearly these levels are being respected, right? When the structure breaks, as we can see here, you can see we've had a candle close outside the structure. So clearly the structure has been broken. Over here, we've had wicks outside. Even here, we've had wicks outside, but we haven't had a candle close outside the structure, which is very important. But over here, of course, we've closed outside, which suggests that this structure is now breaking, right? So usually what happens here is now that structure is broken, you're going to expect the price to move lower, find a new price zone, find a new range, potentially a new support and resistance where it's going to move, or potentially another pattern. It might now go into a symmetrical triangle, so forth. It just tells us that price is now ready to move on onto something else, right? But of course, sometimes price does break and then it goes straight back in, and that's the next thing that we're talking about, right? Retest. So in the previous diagram, if I go back, right, what we're seeing here, this is our support. Support got broken, we've closed outside, and now price used the support as a resistance, as you can see, because we came out, we touched here, and then now from here we'd probably be going lower. If I come back here, so here, this is like an inverse example, right? We were over here, we're coming to our support, resistance, support. We break out of the resistance, and now we're using our resistance as a support instead, and then we're moving up. So retests occur when price flips a support, resistance, or trend line. I don't want to overcomplicate this. This is literally A level on your charts, and then prices come in. Initially, this was used as a resistance, and now here you can see we're using it as a support instead. This level's been flipped. Price is breaking out. It's using the old levels as a support or resistance now, and it essentially acts as a confirmation. It confirms to us, okay, we've broken out. This isn't a fake breakout. We now know that this old level is, well, now a support in this example, and we're ready for price to move up into a new price range or zone. Quite simple, really. So with retests, there's two main types of retests, right, that traders will most of the time identify and trade. So the first one I'd like to talk about is a rounded retest. So as with all the examples, we're seeing something similar. We've got a support, price is touching, price is coming to a support, resistance. We're respecting these levels, so clearly we are in a range. But then price closes outside our range. So we've had a break of structure, which was the first thing that we spoke about. So now you might be thinking, okay, we broke the structure, but we didn't retest. So how can you be sure that price is going to come down here and then not break back inside the range, right? So conservative traders who don't want to take a lot of risk here, would realistically wait for price to come and confirm that this is a resistance, which price does. It takes a while. If I remember correctly, this was taken from a 1 hour chart. So this probably is about a day and a bit worth of candles over here. So price did break out and then it took quite a while, but eventually, as you can see, there's a reason that this support is half red here and half green. So of course, this was a support initially, and then now it turns into a resistance because price is closed outside. We've traveled lower, and then we've come back, used this level now as a resistance instead, and then price is ready to continue moving down, right? What could have happened here is price could have broken out, come here, then gone straight back inside, because behind the scenes, what's happening here, before a lot of people were buying. When this line was green, when we were using it as a support, a lot of people were buying from here. Now what's happening is people have realized, all the people in the market, they're realizing now price is broken out, we should use this as a resistance. So now instead, people are selling over here, so it's pushing price lower. Hope all of that makes sense. Next one, immediate retest. This one's a lot simpler. Literally, same thing, support, resistance, resistance, we're coming down. We now, again, break outside of our range. We close outside, right? A candle closes outside. So you can see where my cursor is. The first candle closes outside. The second candle offers an immediate retest. Price touches that level, and then we're good to go. Over here, if you look closely, we closed outside. There's no immediate retest. This candle did not touch that support to confirm that it's now being used as a resistance and go. Over here, we close outside. Next candle immediately retest, shows that this is now a resistance because price doesn't want to close back inside. And look, we get continuation. Price continues to move down. So yeah, this one's a lot simpler. These are two of the main types of retest that you're probably going to see in the market. So confirmations. Confirmations are very important. Retests are a form of confirmation. Confirmations act as evidence for your thesis. They're kind of like proof. When you're creating a trade, you might be using a lot of different strategies. You might be using moving averages, stuff like the MACD indicator, RSI. Each thing tells you something. For example, on the MACD, we have something called a bullish crossover. When the line crosses from underneath into the other line, there's two lines in the MACD, it shows that this is a bullish crossover and price might be ready to start moving back up now, right? So that's one confirmation. And now if your RSI has broken outside the range but is coming back inside the range, so usually RSI is in a 30 to 70 range. Let's say we broke below the 30, now we're coming back above 30, it's telling you that price might be ready to start reversing here. So that is another confirmation. You combine that with all your different confirmations. You might be using stuff like the Ichimoku, then your actual chart patterns, what price is doing, and then you use all of that to create what we call confluence. Confluence is just essentially getting all these different confirmations and then creating your trade idea, right? Like I said, building your trade idea step by step. You're using each thing to build it. But what's important is that the way you need to see is, of course, in school and stuff, we all write essays, right? When we write essays, you have to give them evidence, you have to give quotes and whatever. That's, I guess, kind of how you can imagine this stuff. When you're creating a trade, you're looking for as much evidence as possible, as many things as you can to say this trade is going to head in this direction. Therefore, that's why you're taking the trade now. That's why you're buying at this price or selling at this price and so forth, right? So there's different confirmations on different types of strategies, of course, and confluence in different strategies equals confirmation. So just quickly want to show you guys something. Let's just go over to here. Okay. So this might not make a lot of sense to you straight away, but just to get my point across, right? So let's ignore my Ichimoku for a second, right? Come down to a 4 hour. So this is called an Elliott wave count. So here we've got an Elliott wave count. 1, 2, 3, 4, 5. This is a strategy. Now, I probably will go over this strategy. I'm not going to get into the details now, but there's a reason that these points are all here. Price has respected them, and now we're expecting price to move here, here, here in this pattern, right? So this trade idea, this is not from the Elliott wave. So this trade idea was formed from the daily Ichimoku. Now, if you look at the daily Ichimoku, if I just told my group chat this, if we close above this level here, I'm expecting a move up. The Ichimoku is telling me things. You guys should go and watch my other Ichimoku video to understand what I'm on about. It's quite a short one, but essentially the Ichimoku here is telling me that price, if we close above here, use this as a support, is ready to move up, right? And that's very convenient because what else is up here? The end of wave 3 for Elliott wave. These are two completely different strategies, and they're essentially just showing me confluence, right? Two completely separate strategies have suggested that price is going to move in the same direction if so and so happens. So this in itself acts as another confirmation to me. If these two different things that don't work together at all most of the time are now saying price is going to head in this direction, it just gives you more confidence in taking this trade because it acts as a confirmation, and the more confirmations you have, it's better. So again, still talking about confirmations, right? Like I said, using confirmations, for example, our retest now, it confirms that these patterns, these ranges we're seeing do exist. Of course, you already know they exist, but it just makes it a lot clearer if price is now breaking out and then using the new level as resistance or support. It's just confirming that this range existed, but now we're leaving it behind and we're ready to move on to the next structure or pattern that we're going to create. Trade selectivity, filter the noise. This is very important, right? If you look at your charts, you can open any chart and try to create a trade. You can try to see patterns and whatnot, but you're not going to know which trades to execute, which ones to take all the time. And there might be a lot of them, which is overwhelming, right? This is why having our confirmations is so important. Like I said, the more obvious confirmations there are, the better it is. That essentially helps you filter the noise. Let's imagine price broke out now. You only trade using the retest, right? So let's go back 1 second to this one. So let's imagine price broke out here, right? Some traders would have sold here. They would have shorted the asset and price would have moved down to be in profit. Some other traders who are conservative would have never traded this until they saw this retest over here. They wouldn't be trading this, right? This retest may never have come. That is, retests do not always happen. That's something you remember. It's important. All these confirmations by themselves, one confirmation at a time, isn't essentially enough to build your trade on. But when you do have lots of different confirmations, they're coming together, you can kind of collect them, put them into one thesis and say, okay, look, price is going to move up here, price is going to move down here. Another thing, risk management, passive versus active. Passive risk management to me is essentially this second point, right? It brings you mental comfort, conviction, and adds justification to your trades. What all of this means, right? If now you have, for example, let's say you have 5 confirmations, your MACD, your RSI, you're getting a retest, your Ichimoku, your whatever, there's a lot of confirmations you can use. If all of this stuff is pointing towards price going up, and now you enter your trade and you get stopped out, price hits your stop loss, it essentially brings you mental comfort knowing that this wasn't a stupid trade. All the right things were pointing this way, so you took this trade, you got stopped out for another reason. So you essentially build a system and you put faith in that system, and as long as you're sticking by it, you have the conviction of taking trades when you see the right things. If you're waiting for a lot of confirmations to take a trade, the odds are, like I said, this is your active risk management, you're going to have a higher success or win rate. If you're waiting for a lot of confirmations from different strategies and indicators, it's probably likely you're not going to be trading as much as the average person. But that's not a bad thing, because if you're protecting your capital and then only taking your high probability setups, that's very important, because all that's going to mean is if you do get stopped out, it's not going to be very often. And when you do take a trade, it's more likely you're going to be successful, and that trade's going to go to your take profit level, because of course you're taking all the confirmations in and then creating your trade. So other key points that I want to go through. So retest, just cover them very briefly, right? But usually traders will look for retests on the same time frame, but some traders will also take lower time frame retests. So for example, in our support and resistance, if we go, yeah, over here, let's look at our immediate one, right? So let's imagine this is a daily chart, right? So come down here, come down. We break out. This is a daily candle. Now we've closed outside with a daily candle. Imagine the next candle. This is also a daily candle, right? Some traders would not wait for this daily candle to close. If the 4-hour chart, for example, tested this level and then closed outside, they take that as a confirmation and enter the trade there and then. Other traders may potentially wait for this daily candle to fully close, which I'd recommend for any new traders. It's just safer, it's more conservative. Of course, you might miss out on some gains, but it is worth it. It makes sense, because then you're not running the risk of price closing outside, then the next daily candle instantly breaking back inside, right? So back over here. Like I said before, rounding and immediate are just two common ones. Sometimes you get other types of retests. You see repeated retests as well. On a chart, price may retest the old trend line, the old support resistance a few times before moving on. But if it does retest a few times, if anything, it just proves to you that price is definitely ready to start moving ahead if we're not breaking back into our old pattern or range. So similar to the point from before, you can get caught in the wick because sometimes there's overlapping key levels, right? So I'm going to show you this one on the chart. If we go to our weekly chart, right? Okay, so let me pull up a different one. Okay, here, this is quite a perfect example actually. So this is the chain link and Bitcoin chart, right? We were inside this pattern, moving inside this triangular pattern. Price comes, price is squeezed, we break out, and then as you can see, this is a weekly chart. This candle, I'll just zoom in a little bit. This candle right here retested and then closed outside. So this essentially acted as a perfect immediate retest, right? This candle, because I'll probably move this a little bit this way, this candle was our actual break of structure. This is where price broke out. The second candle offered us an immediate retest, and then, well, you can see what happened next. Quite a big price movement there. If we now come down to our daily chart, right? So this black line is that same trend line from the weekly. Price broke out here, and even here it gave an immediate retest, right? So essentially you can see the daily was respecting this trend line the same way the weekly was. So you could consider this a daily and a weekly breakout. It depends what type of chart you're looking at, what chart you're trading. Here, like I said, we had a few retests, you had repeated retests of this trend line, and then you can see what price done, just moved on because it was ready to move on. It shows we've broken out, we've now flipped the level and we're ready to move ahead. Now if you come down to 4-hour, we zoom in one more time. So on the 4-hour, after a breakout, essentially here I'd consider this this in itself, let's just add a small one, a different trend line, right? Because you can see price has been respected several times. And then we come here. Okay, I'm gonna delete this one so it's clearer. Okay, so here you can see that price broke out, came back in. Then we actually broke out properly now. What's happened is we have a rounded retest, right? So this is on the 4-hour chart. but it still applies to this weekly level we were initially seeing. Because here we had a weekly breakout, price moved up, now we come back to a 4 hour. So now, essentially what I'm trying to tell you guys is that some traders would not wait for the weekly candle because, I mean, it's fair because sometimes the moves that you're expecting can happen within that weekly candle. By the time you're still looking for a retest, your take profit's already been hit because price decided to move out without offering a retest, which is one of my next upcoming points. So some traders would just wait for a retest on the 4 hour, the daily chart, and then enter the trade instead of waiting for this weekly level to come down and then retest. Again, this was my next point. Price does not always retest, which might mean missed gains. But as I mentioned earlier, this honestly shouldn't be that much of an issue. The market literally provides unlimited opportunity. There's so many trades and trades you could be taking. So if anything, it's probably better that you only take the high probability setups. As long as you protect your money, you're not risking your money by entering trades that only have 1 or 2 confirmations. You're waiting for trades that have 5 or 6. It's more likely, as I mentioned before, that your trades are going to win. Your stop loss is less likely to get hit. The next thing I want to say is price action. So PA means price action confirmations don't guarantee success because they don't account for external factors. Sometimes you might have a lot of confirmations and your stop loss still gets hit. Your price goes in the right opposite direction. This is because all the confirmations I showed you guys, I mentioned, are price action based. They're what you see on the charts. They don't account for what's happening in real life economics. If you start looking at, let's imagine last year or the year before, sorry, in 2020, when COVID initially started, the markets dumped. And if you were looking at a lot of coins, they probably weren't looking like they were going to dump. They were probably looking like they're about to fly up, they're ready to break out, and so forth. But there's no way to always account for the external factors with your price action. So, what I'd recommend is try to be clued in, try to do your fundamental research, not just look at the charts. Even if you're not doing it in depth, it's not necessary, but as long as you have an idea of what's going on and what the effects of that could be, it's just something good to have in your skill set and just within your mind when you're doing when you're drawing up your charts. And again, confirmations are not confined to price action, right? For me personally, this isn't something I'm recommending to everyone, but sometimes I'll draw up a chart and then I know there are traders that are 100 times better than me, let's say, or they've been doing this thing for several years, and of course they have a lot more experience than me. To me, if I draw up a chart, for example, I showed you guys chain link, and now my chart is telling me we're ready for a breakout, it's bullish, and now I go and speak to another trader, or they send me their chart, and this more experienced trader is also saying, okay, chain link is going to break out, and their analysis might either be similar to mine or it might be using a different strategy. If it's using a different strategy, that in itself is another confirmation. But for me, it counts as confluence if another trader is also, another more experienced trader is also able to tell me I'm seeing the same setup, I'm expecting price to move up and so forth. So yeah, that's just all I mean by confirmation. Don't have to be confined to PA. You can just keep it simple as, you don't need to overcomplicate it, but yeah, there's just different ways to go about it. I hope you guys understood everything. If you have any questions, just message me. Here's my Twitter, of course, my YouTube and my Instagram. You can message me anywhere about anything. I'll be able to help you guys. And I really hope you learned something from that. And I'll see you in the next video soon.